Every year, Canada exports more than $7 billion worth of seafood, and most of that goes to the United States.
That these actions will end up hurting American workers and American consumers.
From fishers to processors to exporters, many in the seafood industry are nervous and uncertain about what tariffs could mean for their livelihoods.
For years, U.S. fishermen could count on Canada as a friendly, dependable buyer. Lobster boats in Maine, crabbers in Alaska, processors in New Bedford and the Pacific Northwest. Everyone knew Canadian wholesalers would take volume fast. But that old map is being redrawn. Over the past few months, Canadian importers have begun canceling orders, delaying shipments, or quietly switching suppliers, leaning into Asia instead of the United States. They're not doing it loudly, they're doing it with spreadsheets, price spreads, tariff math, delivery risk, and trade certainty. And the result is the same. U.S. seafood is getting rejected, while Canadian buyers pivot toward Japan, Vietnam, and other Asia-Pacific partners brought closer by recent trade deals. Why does this pivot make sense for Canada right now? Start with uncertainty. After Washington escalated global tariffs this year, Ottawa signaled it would respond and even mapped out large baskets of potential countermeasures. When you run procurement for a Canadian retailer or wholesaler, that's a giant red flag. Don't get caught with inventory stranded at the border or a cost structure that explodes overnight. So buyers go where the rules are clearer, into Asia through the CPTPP, where tariffs on fish and seafood are being phased down or eliminated and documentation is standardized. Asia isn't just another market, it's the growth engine for global seafood. Japanese and Southeast Asian buyers are expanding aquaculture, upgrading processing, and locking in long-term supply contracts. For a Canadian importer that wants stable supply and predictable pricing, a CPTPP partner like Japan or Vietnam looks attractive. No cable news drama, just contracts that clear. Meanwhile, the trade math hasn't been kind to North America's cross-border seafood flow this year. Industry groups in Canada described the mood as glum after the latest round of tariff disruptions from the U.S., and risk managers responded exactly how you'd expect. They diversified away from U.S. origin. That doesn't mean American product disappears. It means it loses its privileged first call position. Let's put some numbers on the table to see what's being shuffled. U.S. seafood exports were roughly $5 to $6 billion in the latest comprehensive NOAA tally, with high-value species like lobster, sockeye, and surimi leading the pack. That's not small. When a major neighbor like Canada soft signals that U.S. product is risky to book, even a modest shift hurts boats, processors, and trucking lanes that depend on steady throughput. On the Canadian side, official dashboards show fish and seafood imports in the $4.5 to $4.9 billion range recently, with salmon, shrimp, lobster, and tuna among the top lines. The mix keeps evolving. More Asian-farmed product, more value-added SKUs, and increasingly sourcing that follows trade agreements rather than geography. In plain English, if Vietnam or Japan can land compliant, tariff-advantaged seafood on time, Canada will buy it. Here's the quiet revolution. Trade agreements are doing more work than headlines. The CPTPP gives Canada preferential access across a network of Asia-Pacific suppliers. Tariffs get cut, paperwork is harmonized, and logistics corridors, cold chain, inspection regimes, traceability get standardized. That's not flashy, but it's deadly effective. If you're a Canadian buyer juggling risk, every friction point removed in Asia makes U.S. origin a little less competitive, especially when policy out of Washington looks volatile. This pivot also matches where global money is moving. Japanese trading houses are doubling down on salmon and other aquaculture bets, signaling long-term confidence in Asia-centric supply. That capital goes straight into expansion, more volume, better genetics, tighter cold chains. Canadian importers see that scale, and they know it can fill shelves reliably. So who wins and who loses if this continues? In the short run, Canadian wholesalers and retailers win on predictability. They can plan promotions, hold prices, and tell customers where the fish came from with clean documentation that customs likes. Asian producers win with volume. Vietnamese shrimp, Japanese farmed salmon, Malaysian or Singaporean processed lines, all enabled by CPTPP tariff cuts. For the United States, the picture is mixed. Some boats will still sell into Canada on relationship and quality alone. New England lobster and Alaska whitefish have strong brands. But processors that depend on high-volume cross-border throughput are exposed. If they lose shelf space in Toronto, Montreal, or Vancouver for CPTPP-sourced product, that volume doesn't always come back. Once a Canadian buyer rewrites a playbook for Asia, supplier audits, currency hedges, logistics lanes, it tends to stick. Could Washington fight back? Sure. One option is to stabilize rules and remove the constant threat of surprise tariffs that spook buyers. Another is to negotiate very specific seafood protocols with Ottawa: inspection mutual recognition, digital certificates, guaranteed clearance windows, so Canadian procurement teams feel safe booking U.S. origin again. The most ambitious option would be to match what CPTPP did for Asia. Create predictable market access with timelines businesses can bank on. But that requires policy discipline, exactly what's been missing. There's also a sustainability angle that's easy to miss. Asia's big buyers want traceability, certifications, and low-carbon logistics. Canadian chains are leaning into the same requirements. If U.S. fleets and processors invest in traceable supply, publish carbon footprints, and align with certification schemes that Canadian retailers already use, that's a competitive wedge, even against tariff-favored suppliers. Right now, though, the decisive factor isn't labels, it's certainty. And Asia, via CPTPP, is selling certainty.